How's it going, everybody? It's Stas here, and in this video, I'm going to be sharing with you all my M1 Finance portfolio heading into the year of 2020. What I'm holding, my activity in this portfolio, dividends, capital appreciation, everything about this portfolio I'm sharing with you all in this video, plus my thoughts on the market in 2020, heading into the year of 2020, and kind of how I want to sculpt my portfolio in this upcoming year. So if you guys enjoy this video, find any value in this video, all I ask from you is to go down below, hit that juicy looking like button. You see that little like button? Turn that like button blue. Consider subscribing if you want to see further content from me, and if you want to be further connected with the Strive Smart community, the amazing community that we've built here on YouTube. Discord's linked down below, and the Facebook group is linked down below. So guys, let's break down my portfolio here on M1 Finance. So you can see the total amount that I have in this portfolio is $1,049.23. And by the way, I started this portfolio, for those of you guys that don't know, back in July. You can see here, if I go to the all, which I'm on right now, you can see performance since July 2nd, 2019. You can see how it's been doing. Up 18.88% right here, up $81.62. And it makes sense because the stock market in general, the S&P, NASDAQ, Dow, the markets have been crushing it, right? So it makes sense that my portfolio is doing very well as well. I believe I'm doing actually better than the market because I didn't invest in, just ETFs. I picked individual stocks and some were undervalued. We'll talk about that in a couple of minutes here. But overall, since the 2nd, the 2nd of July, I'm up 18.8% on this portfolio, $76 being from market gains and $5.24 being from earned dividends. And the way that I have this set up is, again, like I mentioned, I have individual stock picks, but I also have some ETFs here that will provide some stability, in my opinion, to my portfolio and some recurring revenue, from those dividend streams from one ETF in particular, actually both of them. One's monthly and one's actually quarterly. So let's talk about what my holdings are very quickly. And for those of you guys that have seen my videos on this M1 Finance portfolio that I've actually been, documenting on the YouTube channel, you probably know a lot of these holdings. And if you guys haven't seen previous episodes, I'll link up the playlist down below. But pretty much this is the portfolio, right? I think I have 11 holdings. Let me count. I think 11 or 12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 actually. 14 holdings in this portfolio, and we'll run through it quick. I don't want to spend too much time on each one because this video will be like 30-40 minutes. That's not the point of this video. But you can see here, Johnson & Johnson, my biggest position. It's a little bit overweight, about 12.4% right now, with the target being around 8%. I'm up 15% on this position. Started buying in, I believe, in the low 130s. If we can just, make sure about that. Yup, 130 is my average price here on Johnson & Johnson. The next one here is an S&P 500 high dividend yield ETF. Started buying this one at $39, and this one actually pays 4.4%, and it is quarterly in terms of the payments. So I have about 10%, or it's supposed to be 10% of my portfolio in that ETF. Right now, it's about 11.4%. The next holding is Altria, ticker symbol MO, doing very well on this holding. Average cost is $43 here. Dividend yield right now is 6.7%, which is nuts. And on the position in general, I'm up 26%, which is crazy. The next one is PayPal. This one's been doing quite well. It's supposed to be 5% of the portfolio. It's 8.7 right now, so it's a bit overweight, but it's okay. At this point, I'm just holding it, not really looking to, trim anything off of the position. Once I add more money to some of the other holdings, obviously it's going to balance out and get closer to that 5% goal for PayPal. But overall, again, I'm up around 9% on PayPal. The next one's Facebook, up 6%. This one's exactly 8% of my portfolio, so this one's right on target. And this is mostly because we saw a pull down in Facebook recently recently, it was actually trading around 203. We saw it pull down to about 194, which got us to that 8%. So it actually was a bit overvalued, or rather over allocated in my portfolio, and that pull down actually helped me a bit there, getting it more to the target. So SPHD, this is one that I want to add more to, and it's only 7% of my portfolio right now with a 15% target, which is why I want to add more to it. And this is that monthly ETF that I was telling you guys about. High dividend, low volatility S&P 500 ETF. Average share right now is about $42.93 based on where I ended up getting in. 4% dividend yield with a 0.3% expense ratio, which is pretty good. And again, they pay monthly. The next one here is 3M, followed by McDonald's. These are both more, I'd say, stable dividend companies, kind of like Johnson & Johnson, right? This is one that I just added a couple of weeks ago in terms of McDonald's, and I do have a pending buy to add a little bit more here in McDonald's to bring it closer. It's actually already close to that 7%, but maybe to get it to around 7-8%, right around there. And 3M is another one of those stable dividend payers, dividend king, which means they've been paying and increasing dividends, or rather paying the dividends for 50 plus years. So those are those two holdings right there. I have AbbVie here doing very well on that one, 25%. This is another one that's a dividend payer. The dividend yield right now is probably around 4 or 5%, and this is supposed to be 5% of the portfolio. It's right around there now, 5.6%, and I view this one strictly as a hold, right? I took a little bit of profits off the top, I believe, a couple of weeks ago, or maybe that was an AT&T actually. I don't know if I did that in AbbVie. I'm forgetting here off the top, guys, but that's one that I just plan on holding. Even though I did take a little bit of profits, I still plan on holding this one long term to get that dividend. The next one is VEA here. I really like this ETF. It's a developed markets ETF that excludes the United States, right? So if you want to invest in a foreign, ETF, this is a good one in my opinion. I'm up 10% on this one. Average share price that I'm in at is $42 here, and you guys can see I want it to be around 5-6% of my portfolio. It's right around there now. The next one is Amazon, which is a bit under allocated here at 5%, supposed to be 8%. And I'm looking to get maybe a dip buy in Amazon in the near term future. Again, these markets are at all-time highs. I'm not looking to buy heavily right here. I'm actually storing a lot of cash, so we'll see what ends up happening there with Amazon. Alibaba's one that's been crushing it for me over these past couple of weeks, up 30% in this account, and it's supposed to be 5% of the portfolio. Average cost on Alibaba, let me see, it's $173, guys, and right now we're at about $208. I think today that I'm recording this video, the day I'm recording this video, Alibaba actually hit an all-time high. So doing very well on that Alibaba position. And the next one is actually a gold ETF that I added in my previous update to the series. I believe I added this one. And this is really to hedge against the market in a way, to have a little hedge in the portfolio since, like I mentioned, these markets they're at all-time highs. They keep hitting all-time highs, and honestly, the more inflated these markets get, the more they could potentially fall in the near term on any piece of bad news, right? So I feel comfortable having around 5% in gold GLD. Not looking to make a ridiculous return on this. Again, it's just a hedge, right? It's a hedge because I have a portfolio full of equities, right? Don't have any bonds in here as of now. Might add some later on. We'll see. But as of now, this is the only really, I guess you can say, hedge, safe investment. I don't really know if it's a safe investment. I don't know if I'd consider it that, but you guys know what I mean. And the last one here is AT&T, ticker symbol T, up 20% on this one. Right now, it's really small in this portfolio, 2.8% to be exact. It's supposed to be 5%, but if you guys remember, I actually took a little bit of profits on AT&T, and you'll be able to see that in my activity tab. So now that we're here, you can see kind of what's been going on, and you can see that I haven't been adding much money into the portfolio, and that's because I'm keeping a lot of cash in a high yield savings account where I'm making 1.7 to 2% on my cash. And when I see opportunities that, I want to take a part of in terms of individual stocks, ETFs, then I'll put the money in my M1 account, then I'll buy it. Because if you guys don't know about M1 Finance, you can put money in, and literally the second after, you can set an order for the next coming day in terms of buying whatever amount of stock or ETF that you want. So it's very, very quick, very, very easy, which is why I'm okay holding it in a separate high yield account. But you can see 2 buys right now that are pending, more gold, and I mentioned the McDonald's buy that I'm currently waiting on right here. You can see the dividends that I've received in December so far from Johnson & Johnson, 3M, 61 cents from 3M, 87 cents from Johnson & Johnson. You can see I bought $11 worth of that SPHD ETF. You guys can see I got a $10 referral bonus, which if you guys actually want to sign up for M1 Finance, get $10 for free simply by signing up. You can use my referral down below. You get $10 and I also get $10. And you guys can see before that, I think we talked about this in the previous episode, but I bought more of SPHD, VEA, and McDonald's. I sold a little bit on AbbVie and Altria, like I've mentioned, to take off those profits, right? A little bit of profit since they've ran up so much in a quick amount of time. And really, that's all I have to say in this video, right? We went over activity, my holdings, some thoughts. And to reiterate my thoughts, guys, again, these markets are at all-time highs. There's not too many screaming buying opportunities out there, in my opinion. So I feel comfortable in the meantime, sure, buying a little bit, playing offense, but at the same time, being defensive, stacking up money in the high yield savings account and waiting for the real opportunities out there in the market when we get that big sell-off, maybe that 10, 15, 20% sell-off, kind of like we got last year, in 2018, heading into the year of 2019. In my opinion, that would have been an opportunity to be very aggressive, buying. If the markets were that low right now, guys, you'd see a whole different narrative from me, right? I'd be buying. But again, with markets at all-time highs, I'm cool with playing defense, keeping that money in cash, and just waiting to see what happens here, in the near term. So that's pretty much it for this video, guys. If you enjoyed it, feel free to go down below, hit that like button, and consider subscribing if you want to see further content from me. And again, if you want to sign up for M1 Finance, I really love this brokerage, guys. I've been using it more as a long-term brokerage. If you want to swing trade, day trade, this is not for you, right? Because you actually have to wait until the next day to put through your trades, right? As you can see right down here, it says you have 2 buys, morning 10 a.m. tomorrow. So these trades won't go in until tomorrow. So obviously, people that trade, swing trade, day trade, they need their orders to go in right then and there, which is why this is more of a long-term kind of reinvestment portfolio, a DRIP portfolio, dividend reinvestment plan portfolio, if you set it up that way, because again, you can actually auto-invest any amount of cash above a set amount, whether that be $5, $10, $15. So if that amount of cash is in the portfolio, anything over that is going to get reinvested into your slices. So again, if you want a longer term brokerage and you want $10 for free, that is linked down below in the description box. I'll catch you all in the next video. Thanks again for watching. Peace out.